Good afternoon, traders. This is Christian from Tribeca Trade Group, and this is your end of day as well as end of week market recap for Friday, March 8th. And coming to you from downtown New York City, where the sun is in my face. It's nice to see the sun out, so I look forward to getting out shortly and perhaps having a cocktail. How did the week end? Well, all over the place, and it seemed like this is kind of what we had throughout the week. Just kind of a different market almost every day this week. The ups and the downs, and today kind of finished more to the downside and more of an overall fade type day. One of the catalysts for the day was the jobs report. That was interesting to see how some of these stats came out. The headline number was better than expected, right? And then this crazy revision, which changed about a 35% of what the number was previously to the downside. And the other thing, which I thought was the most important data point of this 8:30 block of numbers, was the average hourly earnings coming in 0.1 versus 0.2. So that's a little bit less. And this is one of the components of inflation that I believe the Fed looks at. And then there's 0.5 versus 0.6. The previous month was also revised down. So we'll see what that translates to for next week. We have the CPI report that comes out on Tuesday. They are looking for the expectations are for a 0.4, which seems kind of hot. So that's an easier bar, I guess, for the market to to go under, in terms of expectations, right? So under promising, I guess, in terms of what they're looking for next week, right? Did I say that? It's usually over promise and under deliver is what you don't want to do. But it seems like this is the other way. The expectations are pretty high for inflation. So perhaps that might come in a little bit lower, but we'll see, right? This is just one of the gauges of inflation and or one of the components of inflation, and we'll see what we get next week. Now, in regards to the price action, well, we talked about, I spent some time talking about in yesterday's video that I thought that, forget about like the valuation story and that type of thing. The story right now is that we've been in a momentum market, and we've been that way for quite some time. And, there's been a lot of areas that in this market that have been performing quite well. Even if you look at my midday note, there wasn't much of a change, right? I talked about, looking for divergences in this market or things that are confirming. We know that this market has been super strong. Now, that doesn't mean that it's not ready for a rest, and that's what we kind of want to be paying attention to, is whether this market is kind of ready for a rest. So the big stock, of the hour today was what happened with NVIDIA. I mean, that has been the stock, that has been on just a tremendous run. I have been long this name. I actually got out of this name. I was looking for, probably stupidly so, I was looking for this to get up to 1,000. I thought that would be the round number that this would kind of get to, and then maybe, begin to kind of either sell off or begin to kind of consolidate a little bit. But obviously the stock will do whatever it wants to do, and it was very extended, coming into this. So it's always a question, in trading about, how greedy are you going to be? And when are you going to realize that something has changed if you've been riding the trend? To me, so the first two things that I see in this chart with NVIDIA is that, yes, that's a hell of a bearish engulfing candle, which again, as it sounds like, bearish, right? When you have the whole body of the candle that fully encompasses the previous day, yes, usually that's a reversal in the making. And look at the volume on this too. I mean, this was huge volume for today. I think that's the largest volume ever for NVIDIA. Oh, maybe not. Maybe this was here. So I guess it has seen a lot of high volume days. If we look at these, most of the high volume days, of course, coming on red days. That's how it works most of the time for stocks, and same thing for the indices. You get high volume on sell days, right? Now, the other thing that stands out to me, and this is kind of funny, I think, to some extent, because we closed right at the 5-period moving average. right? And again, it just shows with with the range of this candle, how extended we were, how extended NVIDIA was from, from the 5-period moving average, which is, short-term moving average. So there's no change in trend for NVIDIA, even though there's this crazy volume. So, again, I was more precautionary seeing that reversal that we saw today to kind of get out of my trading position today. And I also got out of, a few other positions too today, just because I think that, even though I probably will say this a few times in this video, maybe not. I'll try to keep it short, this video. But one day doesn't make a trend. And if you look at this S&P chart, what we've experienced, again, if we kind of just look at what we have experienced over the last couple of months, is a huge market move, right? And a very nice looking trend. And there really hasn't anything that's changed here with the trend. One thing that I would note here is that we're still above the 5-period moving average. Another thing that I would note here is that this has happened a couple times. Now, the candles aren't exactly the same, but I'm just going to zoom in here a little bit so that you could see what I'm referring to. Every time we kind of get to the top of this channel, like you could draw like an imagine, I'm not going to draw a trend line here, but you can kind of see what I'm doing with the cursor here, right? So like for instance here, right, we get a little bit extended, right? We kind of come back in, right? And we get a toppy looking candle for the day. Here's another one, right? We get extended above the 5-period moving average, above like the top of this channel, we get rejected. Take a look at this one, right? This was back on the 23rd. We get a little bit extended and we come back in. Now, this was a little bit more damaging, a little bit of a bigger range. I shouldn't say damaging is not the right word, but this was more of a move today. But overall, we haven't changed anything here. Now, we know that we've been seeing some consolidation and some movement down in some of the bigger tech names. It just could be that we're seeing a lot of rotation on the tape, right? And here's what the Qs look like. This doesn't look quite as clean as what the S&P looks like. But overall, I don't think like this is horrible either. We're still above the 20-day moving average. And that we've kind of come into this 20-day moving average a few times, and it's had some success, right? IWM actually was doing quite well today, and by the way, for the most of the day, the breadth was not bad for the day too. And I'm referring to looking at up volume versus down volume. And if you want to look at this over the day, you could see how we kind of started off the day hot, right? But even though we sold off throughout the session, it wasn't terrible breadth, right? Another thing that I pointed out to Tribeca Trade Group members was that we get these days from time to time where it's either like it's almost like this or that, right? Either the market's kind of continuing to kind of move higher, or we get every once in a while just a day where we just sell off for a whole day, right? And we almost got that the other day. So if we go back to my chart here with the S&P, so it's just interesting how this has been unfolding, I think. So if we look at this on the 5-minute bar, let me just recenter this appropriately the way that I want to, right? But if we go back to the other day, right? Remember, we sold off the whole day, right? And I'm still not there yet, right? I'm referring to, I believe this was the day, right? It was Tuesday, right? Tuesday of this week. Right. We just basically kept on going lower and lower and lower and lower and lower. And then finally, like there was a buy program at the end of the day, and then everybody felt okay. And that made things better. But we've had days like this where we just sell off the whole day, and the bears are in control that day. But again, as I said, I was going to mention this a couple times, right? The one day is not a trend. So it also shakes things up, I think, a little bit to which is not a bad thing, right? We talk about how there's been a lot of positive sentiment in this market. So it's actually not a bad thing to actually have some selling to kind of go, that happens, throughout the trading day. Overall, I don't think much has really changed. It's just the fact that, we're in a momentum market, and momentum can happen on the upside upside, or the downside. If you look at where the VIX is, it's a 1470. It's not screaming higher. It didn't close on the highs. If you look at what, so now we can kind of begin to look at what happened for the week, right? But take a look at what the dollar did this week, right? It was down 1%, right? That's not ripping higher. That's not waving like a caution flag. Look at what TLT did this week, right? Up 1.3%, right? So that's also not a bad thing. By the way, look at the week that gold had. Really strong. We got this trade. We got this trade really right in the trading room, and that's a nice week for gold. And that tacks on. I think gold was up about 2.6% last week, somewhere around there. I might be off on the decimal place there, but it was up over 2% last week. And gold miners were your best performing group this week, 8.4%. Also, the regional banks. Remember, they were real strong in the middle of the week, up 4.1%. Look at the solar group. Dare I say that the solar group may have have stopped going down. Now, I don't know if I'm not going to say go to the weekly chart, go to the daily chart. I'm not going to say that they're ready to rally here, but as far as what they've been experiencing here, maybe the lows are in. Right. This still probably needs to consolidate for a while. I don't think I'm interested, although I haven't really gone too much into this group lately, but you could see you've got the same levels kind of holding in here, and the RSI is trying to improve a little bit. So again, I'm not saying that this is gonna be a market leader or anything like that. It just may be that the bottom might be if not in close to in for that group. Remember, the solar group is very sensitive to interest rates too. So as interest rates, looking at what TLT is doing, as interest rates stopped going higher, that could be the fundamental reason for that. The utilities, right? Everybody loves the utilities, right? The Utes, so exciting. I'm joking, of course. They were up 3.3%. I mentioned the banks already. Blockchain stocks still did well, and even look at the semis. So let's look at a couple sector charts. Here's what the semis did. Yes, that's also not only a bearish engulfing for Nvidia, but a bearish engulfing. So again, this group got super, super hot, right? And there was a lot of money that was made going long this group. But it's okay if it cools down too, right? And actually, it's not a bad thing, right? We don't want to see this market get super, super stretched to the upside. I know sometimes that's counterintuitive for bulls who are playing things to the long side, right? But you want things to kind of cool, in my opinion, you want things to cool down a little bit, right? Otherwise, they get parabolic, and you can kind of see what happens when things go parabolic on you. The reversals can be quite fierce, right? Materials also continue to do well, up 1.6%, right? And on the downside, the China internets continue to be one of the worst groups out there, down 4% for the week. Also, consumer discretionary, right? So we're going to talk the good and the bad here, but Amazon and Tesla make up a good portion of this ETF. With Amazon, I think Amazon's around like a 24% weight, somewhere around there, and that kind of came back. The whole group came back into to the top of the value area. So again, not a lot of breakdowns we're seeing here, just like a lot of things that are kind of digesting and perhaps taking a rest, which I view that consumer discretionary group. All right. Biotech also did not have a good week, down 2.5%. Right. There was some positive drug studies the week before that got this group going, gapped up, but overall, like, this is not bad either. Right. And if we look at the weekly bar for this, right, this has been running really hot. This is okay to me if it checks back here a little bit after all those green bars. Also notice it kind of got to the 200 period moving average installed, but ultimately this to me looks constructive. Right. So I hate to break it to you, but I'm really not that negative about, even though today was one heck of a reversal day. I think there's a lot of trends that are still intact. I think the market got a little bit over the tips of its skis in terms of momentum. Let this kind of come down a little bit. Also, we might have a tricky week ahead of us with the CPI report. Also, Friday is what is what's traditionally called quadruple witching. I think the most interesting of those that we're going to get next week is the index rebalancing, right? And I think that's what you saw a little bit today. All of that index rebalancing, the S&P and the NASDAQ, is tied to Friday's close. However, the big brokerage firms, their trading desks, their portfolio trading desks, certainly get involved in that trade and pre-position before that. And if you look at some of the things, normally what happens on those types of index rebalancing days is that they sell some of the winners and buy some of the losers, right? Which brings us to the next stock, which I thought was interesting today, which was Apple, right? Apple had a nice day today, right? Let me get out of the weekly. Let me go to the daily, right? But it's just, to me, this just looks like a bounce, right? And we talked about, possible places for a bounce. We didn't get one right at that version point of control, but we did get one on the 1 hour. I believe that there was a 1 hour. Yep, there it is. So, maybe this consolidates a little bit, right? And that's sometimes what you see once a downside VPOC, but I'm not interested in getting long here. I understand why some are looking at it, right? Apple is not going away, right? They generate a ton of money through services, right? Through things like, their earphones, right? And, but I don't know if the downside is done yet, considering my technicals tell me that we still are in the bearish 80% roll. And I think this 163 level might be more interesting. All right, guys. I was going to end on possibly just, a couple positive stocks that I thought were interesting. One of which is Square. Right, Square saw a lot of call activity today. This will be on my watch list for next week. 79.61. I also thought the week that Palantir had which was pretty strong. Again, I didn't go crazy. I didn't want to add positions. Again, I was taking off positions today. But we'll watch to see if it can hold above 25.36, right? And then another name, GE Healthcare, right? Again, not the most exciting name in the world, but I like that this is trying to push higher here out of consolidation. All right, guys, that is it for the weekend video. Have a wonderful weekend, and overall, in terms of the market activity, just have patience with this market in terms of understanding that I got really stretched, right? But there's still a lot of trends that I think are intact. So I'm not going to jump to any conclusions after one day of a reversal, of market activity to the downside, because we've seen a lot of them over the last few weeks. All right, guys, have a great weekend, and see you in the trading room hopefully on Monday.